partnership, and limited company. What is the difference between them?
Yeah.
We'll discuss today different software those we can use within a hospitality industry for accounting purposes, and how we can use them effectively in terms of, to run our business effectively within a hospitality and tourism industry.
Yeah.
So we'll cover, changing now, we'll focus, according to the learning outcome. That will be more easier for you and for us as well. So
Yeah.
we are covering now LO1. Then the next lesson we'll discuss about double entry bookkeeping. I'll explain you a bit today, but proper will our discussion will be. We'll discuss how VAT value added tax we can calculate on the sales and the purchases. And we'll go through cash budget during our next lesson. Then we'll go through different sort of financial statement those would normally prepare in accounts.
Yeah.
LO3 and LO4 will discuss about sources of finance, where we can get the money, how we can make the budget, and we'll try to prepare the budget, cash budget, how we can effectively prepare our budget by using templates.
Okay.
And these all these key elements which we're supposed to cover within this unit, which we'll go through.
Okay.
Any question?
No, that's fine.
Okay. So this book I'm going to send you in your email box as well. One book is online, which is available on Moodle. So that's one extra book which I'll send you, so you can, if you want to do a bit, background reading, you can as well, and you can reference when you prepare your assignment.
Yeah.
Okay. So we'll start now. So our learning outcome today lesson, which we're supposed to cover and we're supposed to address, and these are the aims and objectives of today lesson. So introduction to financial management and financial accounting. We'll discuss a little bit rule behind debit and credit, which is a double entry bookkeeping. We'll explain you how many type of financial statement we prepare in accounts. Either we are in a hospitality, and we'll discuss, accounting software those we can use. Different types of ownership, which is a sole trader, partnership, and limited company, as we can start a business. So I wish, end of lesson we will be clear, and we will be in a position to describe difference between a data and information and the ledgers, and we'll discuss the financial systems, financial management, software, and types of ownership.
Okay, yeah.
So what do we know about the financial information? Anything comes in our mind? What is the financial information?
Yeah. Hello?
Yes, hello.
Yeah.
Financial information.
Yeah. I don't know, something like anything that's related to money. And yeah.
Yes, anything related to money, anything related to budget, anything related to source of finance, and it's relating to monetary things, is we call the financial information. Well done.
Yeah.
So where we can get the information? What are the sources of information? If you want to get the company is a sound financial position, so where you can get the information from them?
I don't know.
So we can look around the company's financial statement, which is a profit and loss, balance sheet, cash flow, and the shareholder statement, which public limited company must publish, and information is available on the stock exchange, on the company website, and the company house. Company house is mean where the company is registered with the registrar office.
Okay.
So that provide us financial information. Within the organization, it could be management account, daily reporting of all the financial transactions. that give us financial information as well.
Mm-hmm.
Okay. So next our discussion is about difference between financial accounting and financial management. Some
Mm-hmm.
people say I'm a chartered financial management degree I have, and some maybe say, oh, I'm a chartered financial accountant.
Okay.
So when we are talking about the financial accounting, is more regarding the business transaction in the book of accounts, like profit and loss, balance sheet, and those sort of statement they prepare,
Okay.
which is example of chartered institute like ACCA
Yeah.
and one other AAT, other ACA, and
Yeah.
various other institute in various other countries. Every country have CA institute, chartered accountant. That's a financial accountant.
Yeah.
Then other institute for the management accountant, CIMA, which is a Chartered Institute of Management Accountant. So
Yeah.
one is dealing with the financial management, is dealing more with the costing, how much cost me.
Mm-hmm.
Financial accounting is a just a recording. They not make the decisions, they just only record. But the
Okay.
financial management, they make the decision where we will borrow the money, how much we will borrow the money, where we will buy the stock, how much we will buy the stock. Is it financially sound to be invest in any particular project? That's all about the financial management.
Yeah.
Okay. Next, we have a slide. Uh, there is a difference between financial accounting and management accounting or financial management. So when we are looking the financial accounting, is normally the user of the financial accounts are external, like HMRC, like any investor those like to invest, any suppliers want to decide either will give them loan or not, or will give them credit or not. They
Yeah.
need those are external. But the management accounting or the financial management is internal. Managers always look how much is cost, how much is we already paid, how much we are going to pay, where the cash will come. All
Yeah.
this is the purpose of information. Both these provide the information, financial accounting and the management accounting provide financial information, help investor, creditors, and other make investment or credit or other decision. But when we're looking the financial management, they help them plan and control. Why you spend more? We
Yeah.
give you perform better. So where we looking more in hospitality industry, we're looking more like how many rooms we have, how much revenue we generate, where we'll spend, how much food we bought. So all these are management decision which will make, where we can cut the cost.
Yeah.
When we're talking about the financial accounting, normally is a delayed and historical. Historical mean when we bought it the property in 1980, still will be recorded in our book of account. But when
Mm.
we are looking the management accounting, where we'll keep the most current and the future oriented like sort of decision. We're looking how much we bought this product, how much we're going to sell it.
Yeah.
Those sort of. Then financial accounting have a standard. It's called GAAP, is called Journal Acceptable Accounting Principle or International Accounting Standard, which is how we can record, right to left, left to right, debit and credit rules apply there, financial accounting. But the management accounting, there is a no rules properly. It's up to you how you can betterly is beneficial for your organization.
Mm-hmm.
Okay, objective of information could be because objective, auditable. So financial accounting always, big company, they need to be audit their accounts. But the
Yeah.
management accountant, they don't need audit. They just want to make sure, the things running smooth. But if by law, it's not a compulsory scope. Aggregate information about overall organization, but in a management accounting could be a departmental. don't need to be aggregate overall organization performance. But a financial accounting is reflect everything, how the company perform in terms of the profitability of the company.
Yeah.
Much invest. So these are the key points, some so a bit, background reading. So difference between. And sometimes it's come financial accounting and difference between cost accounting. Costing is just purely we measure how much is the labor cost me, how much material cost me, how much food cost me, how much overhead we have. Overhead mean, that's not directly involved in the production, but still is a cost. Like admin office don't work for the production department, but still is a cost us. If we have a licensing requirement, still is cost us. So we looking all the costing under cost accounting, but the financial accounting, as we said, we prepare the financial reports.
Yeah.
Any questions?
No.
So that's the big difference between two.
Yeah.
Now the first when we are doing our 1.1, we define accounting and financial management. What is the difference between them
Yeah. Yeah.
to address this learning outcome?
Yeah.
Then next we are looking for purpose of financial accounting system. What is the purpose behind? Either we are in a hospitality industry or any other. So purpose to ensure that all the transactions are correctly recorded and can gather together the period in order to prepare the set of financial statement.
Mm-hmm.
So purpose of accounting is a systematically record in the book of account, like a debit and credit rule. First, we have a transaction, like we bought a furniture. How we can buy the furniture? Let's see, you want to buy a furniture. What are the ways to buy it?
Mm-hmm.
So we can, when we buy a furniture, furniture is a coming in a business and something is going out of the business as well, cash, yes?
Yeah.
Or we can pay them later dates. Maybe we're not paying now, but we will pay in a year's time on the
Yeah.
basis of the finance. So one will be debit, one will be credit. So fund is a debit and the things going out of the business will be credit, or the liability we are creating which we'll pay later on, that will be credit. So that's a transaction. Each transaction have a debit and credit.
Yeah.
So then we record them in the primary document, which is we called, like a sales goes in the sales book, purchase goes in the purchase book, and non-current asset, which is the furniture, will goes in the asset register. So we call these are is called primary documents. Book of primary entries like purchases, sales, day book, all sort of purchase will put in the purchases book, all type of sales will put in the under the sales book. And then we prepare the ledgers from it. So just I'm giving some, don't need to be too much detail to learn basically the financial management more here instead of financial accounting. So like
Okay.
a transaction, type of transaction can be cash sales, credit sales, sale return, receipt from the credit customer, cash purchase, credit purchase. These are all it's called transaction. Then primary document, like
Mm-hmm.
sale invoices, credit invoice, remittance, notes, books, all these are called primary document. Prime entries, cash book, sale day book, sale return book, cash payment book. So these are all called primary entry where we'll keep all the record of the travel. Then
Yeah.
ledger is like a sale ledger, purchase ledger where we'll put all the sales and the purchases. And dual effect, like we discuss about debit and credit. In accounts, we always have a accounting equation where we have a assets. In a business, we have a liability and we equal to capital. Asset mean like building, plant, machinery. Liability mean any legal obligation, the money which we're supposed to pay in the later dates. The capital mean the total worth of the business.
Okay. Yeah.
So that's we. Please, if you have any question, ask me.
Yeah.
Okay. Next, we're looking the principle of double entry bookkeeping. We call to remember simply, we use the word abbreviation that click. D stands for debit, increase in debit. Expense, when expenses increase, we do debit in accounts. When any asset we'll buy increase in, we do debit. And any money we draw for personal use, we do debit as well. When we'll decrease these things, we'll do opposite of it. Normally we do debit when addition, when reduction, so we do other side of the accounts, like plus and minus.
Mm-hmm.
When we're doing click, debt is stands for debit, expense, asset, and drawing, and click stand for credit increase, like liability. If we have a more liability, we need to pay more money, or we have a more out, we call liabilities. Income,
Okay.
income mean any sales we doing, any get income getting, we always do, we'll put on the credit side as well. And capital, any money we are investing more in the business, we also put on the credit side in the accounts. We call debit and credit. So both sides should be equal. When we are investing money, it's mean is a capital increasing, another side is a cash as a asset is increasing. So we debit and credit will be automatically equal. So I'll send you some questions to look around to just
Mm-hmm.
get the idea.
Yeah.
We don't need to learn more accounting, but we need to be. It's good to be at least we have a good understanding about.
Yeah.
Okay, when we are preparing financial plan, so accounting help us, the financial management help us to make the financial plan. So we can make the budget like sales budget, operating budget, capital budget. We
Mm-hmm.
can prepare the income statement like profit and loss, where we can look around how much is the cost of goods sold, how much we have a running expenses, how much tax we pay. Break even. What is meant by break even?
To be even at the end of the day, so not having loss or more money.
Brilliant. Break even is a point where no profit, no loss.
Yeah.
So balance sheet, it shows all the assets, all the liabilities, how much in the investment we have. So any company financial statement we can pick and we can look around as well. That give us a lot of information. Then cash flow mean how much money we supposed to receive and how much money each month we supposed to pay. So that's
Yeah.
flow in and out in the business. Okay, so this video we're not going to. Okay, double entry bookkeeping,
Mm-hmm.
all about recording systematically in book of accounts. So bookkeeper, if we'll say we are working as a bookkeeper mean to record the business transaction in the certain books. When the bookkeeper jobs finish, then the accountant jobs start to prepare the financial statement like a balance sheet, profit and loss, and other.
Mm-hmm.
Right. So book double entry bookkeeping like debt click and this slide is almost the same thing. Like when we
Yeah.
have in debit, when increase liability we do credit, when income increase we do credit, when expenses increase we do debit, when
Yeah.
capital increase and when decrease we do opposite then. Like asset debit in normal case when we are selling something or asset, building plant machinery like we are selling, so it means the decrease our assets.
Yeah.
And as them cash will be increased when we'll selling something, it means we are getting cash, so our cash position will be increased. Okay, this is example of debit and credit here, like we purchased, the money we paid will be credit. So in this way, and this is accounting equation, right hand side equal to left hand side, like asset, total asset worth of it should be equal to liability plus capital in a business. Profit, when we'll say we have a profit, it means we have a sales, whatever the worth of the sales we have, we'll take out all expenses out of it, and then we'll say we earn the profit.
Yeah.
Okay. When we are talking about trial balance, it mean we need to be look around the debit and credit. So every ledger we have a balancing figure. The balancing figure we are putting in the balance, which will go through because one of our learning outcome we have to prepare that trial balance. So which will do so. That will make you more sense of it, and we'll go through proper, the trial balance we'll prepare. Okay, these are the statements normally we prepare in statement of financial position. We also call balance sheet, profit and loss. We always need to look around the standard and the concept of debit and credit is being explained. The statement of financial position, it means the balance sheet where we show all the assets and liabilities and capital, and the profit and loss, as word indicate, profit or loss, where we putting all the income, all the expenses, all the profit. And profit and loss account we can prepare like this. We always have a sales revenue first, or we call turnover revenue, and the sales is the same thing. Then we'll calculate the cost of sale, how much cost me, and then we take out all the expenses. If we have other income, like we have a spare money, we putting in a bank account and the bank giving us interest, called other income. Because that's not our normal business. Our normal business is hospitality, but we are doing some extra work, spare things we are selling. So this is one of the layout, how will the profit and loss supposed to be look like, which will go through the following lesson. Balance sheet, what's come, and the layout of the balance sheet, how it's supposed to be look like. Any question?
No.
Okay, so we normally we have accounting standards, like when we are depreciating or reducing the value of the asset, under which standard how much we can allow, or we can reduce the value. So we need to follow these standards when we record stock within accounts, so we know how we can. These are all the standard. We don't need to know a lot, but these will help us, to understand accounting. But just the sake of. So financial statement when we are preparing, that will help us and provide the financial information. Going concern mean the company will carry on as a normal business by looking the financial statement. Accrual, we looking how much income we have, how much expense we have, we can match them concept. Prudence, we can test it, the asset, we can prove it. If somebody say we have a 10 million of asset, so a auditor normally go in a business and test it, must they have or not. They're not overstated, maybe they are saying we have a 10 million worth of asset. Actually that's not worth of 10 million, maybe that's worth of a million. So sometime in accounts people manipulate the figures. So prudence mean the check, we must need to, these are the characteristics. Consistency, every year we need to be compared. If we are giving 1 year figure, we can't compare with the last year. So that's why when we publish the account, we'll publish 2 years together. Last year figure and this year figure. So people can look around what's the business really make it or not. Okay. Relevance, always, we in accounts we need to be look around which figure is relevant to which accounting period. It's 12 months. We always prepare 12 months, otherwise it's not relevant. So 12 months. It's 1 year, 18 months account, next year, 6 months, and the year after, we can't compare it then. Verify, we can check, verify them. Faithful is a true and fair, the figure need to be. Figure need to be understand. We not make, the complicated thing people can't understand it. So if we are using any standard, we need to clearly method how we can or how much profit we have. The timeline months. So these are the characteristics of the accounting. This is give us, financial information, the record and circulation of the money within our organization is grouped broadly into three categories. We look around the financial account statements, like financial reports, profit and loss, management accounts, There's ideally record of income and expenses and financial plan of the business, how much they are going to spend, where they are going to spend. We can look around that will help us to make the decision to invest or not. So this is all information about the and manager's responsibility in our organization, either with hospitality to keep the financial records. Manager need to recognize impact of day-to-day financial activities overall the financial position. If to day-to-day worker is coming late, workers are not working, they are wasting things, ultimately that will lead to the organization big loss and organization will suffer, either they have to close the business. Managers need to understand the overall financial health of the organization. Financial health of the organization means the financial position of the company. If they don't have a money like BHS store, British Home Store, so ultimately the company will collapse. So we need to be clearly understand which way, or maybe some loss making unit we need to close, or maybe we need to promote. So same thing in hospitality industry we need to look around as well. Okay. Next, now we're looking sole trader, partnership, and limited company. What is the difference between them?
So the sole trader is one person and is responsible for the money if it has any loss. So is directly responsible for it, whereas like the limited company can be made by one person or more people in different percentages of responsibility or something like that. But if they lose money, it won't affect their direct pockets, I guess.
Yes, well done. So in a sole trader, risk and reward bear by one person, and one person is take the advantage or disadvantage of everything.
Yeah.
And partnership?
Oh, partnership. I don't know. I've never looked into it. I don't know.
Partnership would be two or more person coming together for the common purpose.
Okay.
And normally the business run under the Partnership Act in 1890 within the UK.
It's 18.
Like
No, sorry. What did you say again?
1890, 1890.
Right,
The act,
yeah.
actually been passed in the parliament in 1890. Different country have a different partnership act. So, like in Italy, slightly different, years when the partnership, the act been approved. So there could be a clear written agreement between the partner who will how much we are investing, the sharing ratio between us. Like, you have invested 30% money, I have invested 10% money. So I will get 10% profit, you will get 80%. Yes. Someone else will get percentage as well. So we need a written agreement. If the partner will leave the business, they need to give the notice. They have to, when they withdraw the money, what we'll do, how we'll share between us.
Yeah.
So all the partnership. So legal status of the business, in a sole trader you can start whenever you want to be, but in a partnership the partner are in the business, they need to be written agreement under the Partnership Act. The liability could be unlimited, but in the Partnership Act normally up to their investment. But in this, when we are talking about limited company, how many types of companies normally we can start a business?
How many types of company?
Yes.
Well, sole trader, limited company.
Yes, these are the three types of the business. You can start as a sole trader, you can start as a partnership, and you can start as a limited company. But under limited company can be two types of companies. One is public limited, one is a private limited. So public limited, the company which issues shares to the public. The private limited, we are five family members, we have a money, we can set up as a company and we'll certain percentage of our own investment. That's a private business. There is no listed in the stock exchange. We are not selling shares to the public.
Okay.
Like in the UK, example is a Best Way. We have a corner shop is called Nisha, Best In, Best One.
Mm-hmm.
Their company is a private limited company. One person is owner of whole business.
Okay. No, can you repeat
And
that for me? Sorry, I didn't understand.
sorry,
No, I didn't understand that. So you've got this corner shop, and what do they do? What do they have? Is that a limited
the
company?
like the corner shop is called Nisha shops. Best
Okay.
In. You may be
Mm-hmm.
seen the names of the brand. Best In, Best
Uh,
One,
yeah, maybe. I don't remember.
or
Yeah.
the corner shop cooperative,
Yeah, yeah.
uh, which is a public limited company.
Okay.
The private limited company, few people, they set up their company in stores, chain of stores, but they're not listed in the stock exchange.
Okay.
Like the company Best Way, they have a corner shops, Best In and Best One, little tin packs and various things they sell.
Yeah.
So that's a example of private. And other public is a Unilever as well, public limited, Procter and Gamble, L'Oreal.
Oh,
We heard
L'Oreal.
L'Oreal,
Yeah.
which is a public limited.
Okay.
So that's all about the public limited and the
Mm-hmm.
private limited. And these are the stakeholders. What those are, like an investor is a stakeholder, lender are the stakeholders, suppliers are the stakeholder, customer, government agency, public, and manager. They have different sort of interest within a company, and they always looking, the information, financial information to make the decisions.
Mm-hmm.
Okay, next we're looking now. Have we heard about Sage?
Yeah.
Okay. So Sage is accounting software which is used in the various organization and which is quite good, and this is normally is a software which we can use to prepare the accounts.
Yeah.
So I put the link there to just watch the video, and when we have a one learning outcome where we need to discuss about the software, accounting software, those are quite good where we can look around, we manage the stock.
Mm-hmm.
Okay, that's all. So this is the one of the software
Mm-hmm.
which is called Sage. We can use it. Okay, so let's see. We'll move to next software. So this is quite popular, is used in many companies, either small or the big even. And that software developed in the UK and being sold throughout the world. And in the various countries, that software is available, and the people use it, and they can link with their tax offices.
Mm-hmm.
Okay, next we're looking the software like sorry. So Sage, it's been developed in 1981. Currently have over 800,000 customer use Sage. 1,000 businesses in the US just using Sage. Sage is the enterprise resource planning software. Enterprise ERP is called enterprise resource planning software.
Enterprise resource planning.
Yes. So like, labor, inventories and various other. So we do the planning with the software as well.
Yeah.
So this software is using various restaurant like Italian Jamie restaurant. Yes.
Yeah.
Quite popular. And Vimto, one company, Morrison and various other supermarket is using this software as well. And either small businesses, big businesses are using Sage. And we can do a bit research about Sage further when we do assignment. So next software is Apexis. Apexis is quite big software compared to the Sage. Apexis could be linked with the various other function of the business. This is like recruitment, selection of employees, training of employees, and various other purposes. This software, but the Sage is more accounting oriented. But Praxis is a bigger, like where we can look around, we can see the trend analysis, the customer retentions and things as well. And you maybe heard about Opera software, which you normally use in hotel restaurant.
Yeah. Oh, it's got everything in it.
Is everything in. Like this is a CRM, customer relationship management software as well.
Oh, okay. Yeah. I don't know if you heard of NetSuite. I used NetSuite in the past.
Sorry, which one?
NetSuite.
Oh yes, Nexus is quite powerful as well. Yes, there are a few others as well because so many software, different companies making nowadays. But yes, you can discuss if you want to Nexus as well in your discussion within assignment. Absolutely fine to address it. Learning outcome really to meet. So thus, provide accounting information as well. Accounting we discuss, is the process of communicating financial information about entity. Yes, five-step accounting transaction that record daily and we can share it by using the software. And business accounting systems like accounting, financial accounting, cost accounting, management accounting used for the planning purposes, implementation purposes, and the control purposes, like how many employees various. So we can do the reporting to control it. And we can that provide the summary of the information as well in shape of financial accounting. Financial accounts are concerned of classifying, recording the business transactions. Then we prepare the statement like profit and loss balance sheet we discussed earlier by using the software. Financial management and management accounting, like we discussed, that's our learning outcome as well, which in other slide we explained as well. Internal yes, yearly 12 months is Axis, yes, is our aim to be simplify, build the finest business tool. Those will help us, link and achieve. So, Paxis are both software help us to calculate the VAT as well. And we can do a bit, the quiz. You want to do quiz?
Yeah, that's fine.
So let's go through the quiz. Okay. I think so. We not learn. No, I think so. This quiz will go through the next lesson. We not learn about the ratios.
Okay.
If you want yourself, you can play with it. Huh? It will do next lesson because I not taught you this topic
Yeah,
itself,
that's fine. We can do next time.
because otherwise will be a bit stressful, or no, why not, why we wrong, huh? So we don't want to be. So that's really all about we
Okay.
learn today. So today we learn about what is the difference between management accounting, financial management. So if we go back to our learning outcome, so define the purpose of accounting and the financial management. So accounting
Yeah.
means automatically record of the business transaction, and the financial management within our organization, and financial source of finance we looking, where we will invest money and how much we'll invest money. Yes,
Yeah. Yeah.
we can find we can discuss about all the payrolls and things. That's a define the purpose of it. Yes, is a systematically transaction. In financial accounting we have a standard, but in the management accounting we don't have a standard. Management accounting more planning and control. Financial accounting is the record and provide the information to the external user stakeholders, like the employees, like we mentioned. And then we discuss about sole trader partnership, what is the difference between them, and critically explain the financial software. These can help in the business. So these three we have addressed today in our lesson. So it's entirely up to you. If you want to, like you can other assignment you can do whenever, really during holidays you can do as well. And if you want to start step by step, like today we discuss about define the purpose, you can write define the purpose. That's 1.2, 1.3. So when the next lesson will happen, so you can send me, I can give you feedback, I can give you extra resources. Quickly we
All
can
right.
build it, carry on finishing side by side, one learning outcome.
All right. Yeah. That'll be. Yeah. Yeah.
Because each week, sometime after 4 weeks, things vanish from mind as well, so it's very difficult to memorize everything.
Yeah. 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 Definitely. Mhm.
So it will go through that way. I think so will be easier for you as well. And
Yeah.
this book, which is already on Moodle, so please follow where you can find the information. Our
Yeah.
other website is called Open Tuition. Our tutor to you. I put the links there in my slides as well. So that will help you as well. It should be there. Okay, so it's not. Think so. It's not. These are the books you can follow as well, and I'll put the website name there. Think so. We missed. Website is called Open Tuition. When you're writing this, so you can use it. Tutor to you.net.
Mhm.
global.com, ATHE.org.uk, CIM.org.uk. Website, quite useful.
Mhm.
There is called, normally it's not a proper academia, Investopedia. That's, .com.
Mm.
So these are the website you can use as well, which is quite good to use. Like, when you're writing about the purpose, accounting and things as well.
All
And
right.
plus, you to write and the reference as well.
Yeah. Okay.
Any question?
No. Fine.
Okay.
It's all
So
good. Yeah.
have a nice weekend, and
And you too.
I will let you know the next lesson. I'm not sure we supposed to do holidays or not. If you want anything, so let me know as well. So rest, I'll update. I send you the recording. I'll upload as well on Moodle, and all other recording on Moodles as well, previous lessons as well. So
Yeah.
in case you want to watch, you can as well, and you can listen.
Yeah.
Okay, brilliant. Have a
Okay,
nice
that's
time.
perfect.
Hope so. I will speak you before Christmas. Otherwise,
Okay.
Merry Christmas. Have a nice New Year.
Oh, thank you very much. See you too.
Okay. Okay. See you then,
All
brother.
right.
Thanks.
Speak
Thanks.
speak
Bye.
soon.
Bye.
Bye. Thank you. Bye bye. Bye.